can handle. Let's go to our next guest. Maybe he can help answer that question for us. We're going to do this with Scott Bauer, Prosper Trading Academy, joining us to walk us through, well, the world of derivatives. And Scott, answer that question for us. What are you seeing and what is it telling you when you see the weakness that we've seen in cyclicals and yet a VIX that's only really still below 20?
Yeah, Taylor, you guys make some really great points here. And I think that we're going to see the VIX stay in this consolidated range probably through the end of the quarter, somewhere between 18 and 22. And if you look at the pattern of the VIX, not just including, what happened March, April of last year, but even pretty much just this entire year, you are seeing a continuation of lower lows and lower highs. So every spike that we're getting, kind of like what we saw yesterday and earlier in the week, they are lower and lower. What does that tell me? It tells me that investors are still looking beyond the current problems, or the current issues, I should say, out there. Number one, the Fed tapering. Number two, COVID. And then number three, which I think at the end of the day might be the most important for the marketplace, are the supply constraints that we're still seeing, especially coming out of China.
Scott, it was interesting. Romaine earlier was showing a board of the strength we've seen in Kroger and then the weakness we've seen in energy. And there's no better way to describe this than the ratio of cyclicals to defensive. And it has been a one-way direction down. Does that mean peak growth is behind us?
No, I don't think so. The way that the market has traded for the last, year, the last 3 quarters or so, we've seen sector rotations come and go. And we've seen them come and go on, almost the flip of a coin, to be quite honest with you. So are we at the end of the cycle? We may be nearing it, but I wouldn't say we're at the end. We've certainly, the growth is certainly calmer than it was 3 months, 6 months, 9 months ago. But I don't think that we are at the end yet. And as a trader, as an investor, I think what this market is telling us is that you have to be nimble. You have to what we call not be married to a position. You have to be able to trade in and out because we've seen so many changes happen so quickly in the marketplace.
Scott, we just show, and we're showing now a chart, the 200-day moving average is just there, right, touching the Russell 2000. As a trader, because we know you don't have a specific options trade today, but what is this telling you about some key support levels?
No question. And I'll be honest with you, that has been the laggard of all the major indices. And myself and my students, we actually put some long option positions on yesterday when it hit down to the 200. I think you have to respect that as a trader. But again, though, you look at something like that and you look at technical indicators, and it's exactly that. It's an indicator. Does it hold all the time? No. But the 200-day moving average is a real strong one. I think it's as good a place as we have seen over the last many months, especially in the Russell, to put on an opening position to the upside.
Scott Bauer of Prosper Trading Academy, thank you as always, particularly for joining us on Options
Taylor.
Insight today. Much more markets coverage.